Hello, fellow rebel capitalists. Hope you're well. Wanted to go over an article from CNBC talking about how Target, everyone's favorite store, Target, is giving a dire warning, and their profits plummeted by 50%. Let's go straight over to this article and check it out. And I think what you're going to be hearing throughout is them kind of reiterating what I have been saying on this channel for the last 6 months plus. But we'll get into that in just a moment here. So title, Target shares plunge after retailer reports profit decline. It's more than a decline. Warns of soft holiday quarter. Target is cutting its fourth quarter outlook after seeing sales slow in late October. Now, this is interesting. Josh, I want you to make a note here because let's bring this up down as we scroll through the article. You'll note that they say that sales have slowed in October, but they also say that because they have like the silver lining here, they say that sales were all-time highs, but they said that in terms of volume. You see, that's a big difference. If you're talking about sales, I would assume they're talking about revenues here. But later on down the article, they talk about volume increasing. But what they're not saying is they're not connecting these dots here. And I don't think they're doing this intentionally. But the dots they're not connecting is that, yes, you're seeing high volumes, but that's because Target is having to drop their prices so low to move this inventory. And that's not a good sign. It's like, let's go back to something that we've been talking about on this channel. Like I said, for probably 6 months now, I've said that in my base case, is we are moving into an environment of inflationary deflation. So what does that mean, George? That's an oxymoron. What I meant by that, and I talked about this on whiteboards as well, is that I think the prices of the stuff people need are going to go up, or at least stay at a very elevated level, where the prices of the stuff that people don't need starts to come down. Now, in aggregate total, if you combine the two, we still may have consumer price inflation, but I think this gives a tailwind to disinflationary pressures. And this is another reason why, I don't make very many predictions, as you guys know, but I actually came out and predicted that in Q4 or Q1 of this year, Q1 of next year, that we would see the CPI start to drop. And I actually got that one right. So moving on down the article here, like I said, profits fell by 50% in the fiscal third quarter. And why? Because it cleared all of this unwanted inventory. So let's think this through. This is another thing that we've been talking about on this channel and the George Gammon channel. And Michael Burry was discussing this on Twitter a couple months ago. It's the bullwhip effect. You remember that, guys? And what's the bullwhip effect? It's when all of these retailers or restaurants or airlines, what have you, or Amazon. I mean, we talked about that yesterday. They are really experienced the bullwhip effect. These people don't understand macroeconomics. They're not rebel capitalists. They don't subscribe to the George Gammon channel. They don't watch this channel. Or if they do, they don't pay any attention to it. Because they thought that all of this demand that they're seeing, they've got all-time high sales. The economy is booming. Just listen to Joe Biden and CNBC. So what are they going to do to handle all of that additional demand that they're seeing in their store, their restaurant, or in Amazon.com or in Target? They're going to do two things. They're going to hire more and more people, and they're going to order more and more inventory. I mean, that's like worst case scenario. If you have all this demand and you don't even have the inventory to sell the people that are literally throwing money at you. So you get this big inventory build, and all of a sudden the demand starts to tail off, and now we see the demand just absolutely plummeting. So what do the retailers do? They have to lower the prices of their product, right? So you've got energy prices, food prices, shelter prices, or at least rents, maybe not shelter now, but rents up, up, up. And even if prices are coming down with houses, I would argue that they're still even more unaffordable because of the mortgage rates. But that's a completely separate video. But you have all these things that people need going up and really putting the squeeze on them, while all of the stuff that they want and now really can't afford, those prices coming back down. And I think that this, yes, the unemployment rate, I get it, it's low. Let's say 3.7. But I think we could very, very quickly go from a labor shortage to a labor surplus as a result of this bullwhip effect, among many other things, where all these businesses hired all these people because they thought the demand was just going to be last indefinitely into the future. And now all of a sudden they're coming face to face with the reality that all of that aggregate demand was just a sugar rush from stimmy checks and central planning. So they say that the shares fell 15%. Stock closed 4% higher Tuesday after rival Walmart posted positive earnings. But you'll notice that Walmart came out and said the exact same thing, that because of inflation, they're seeing people buy less and less stuff unless it's marked down significantly in price. So they're kind of echoing the same warnings that we're seeing from Target, although their profits haven't fallen as much. But this would make sense because as people go down the retail economic totem pole, let's say, they're going to go from shopping at Saks Fifth Avenue to shopping at Macy's to shopping at Target to shopping at Walmart to shopping at Goodwill. So it doesn't surprise me that Walmart got a bit of a boost by Target giving this or echoing pretty much a very similar warning that Walmart has been saying about the customer behavior as a result of this inflation and people's purchasing power being less now than it was in 2019. So here they talk about the inflation factor. And this goes straight into, another idea that we've been discussing on this channel is that can we have sustained levels of inflation if we don't have a significant growth in the money supply? And I'm not saying that we can't. I'm just saying that it's a very interesting thought experiment, because if the price of energy and stuff people need are going up, they're going to have to rob Peter to pay Paul, unless the money supply is going up and circulating with enough velocity to where those wages can go up at the same rate, right? So if they're robbing Peter, well, then what does that do to Peter's as an industry? I'm using that as a proxy for an industry. Well, that means that they're going to go bust. A lot of layoffs, more unemployment. Now, you could argue that because their input costs are going up to such a significant degree because of energy prices, that they won't be able to lower their prices at these. Now I'm talking about the industry. They won't be able to lower their prices because their input costs. And therefore, you're going to have massive bankruptcies or businesses falling by the wayside. But there will be a select few that will remain because they're able to handle the higher prices because they cater to a more affluent clientele that has the disposable income, right? So that's the world. I mean, I could argue both those sides, right? That you're going to see deflation in that sector because of massive bankruptcies. But I could also argue, like I just said, that you will see the bankruptcies, but there'll be a few remaining that continue to increase their prices because they've got an affluent clientele and they can handle the input costs. And that will be then reflected in the new CPI metric or measurement. So it's again, I don't think that you can't say definitively which way it'll go, but I think that you have to be cognizant of both possibilities. But my point is, this is exactly what they're talking about here with this inflation factor. Let me read to you specific quotes here from the article. Target echoed many of the same themes as its competitor Walmart. Consumers are feeling strained by the higher prices for groceries, housing, other necessities. They're buying fewer full-priced items and holding out for promotions instead. They stretch their dollars. They are choosing smaller items, value packs, or the retailer's own less expensive brands. So guys, combine this with the layoffs at Amazon, combine this with all the tech layoffs, combine this I mean, what you're seeing in housing, combine this with the yield curve. I mean, my goodness gracious, if you're not preparing for a recession, significant recession in 2023, I think you've just got your head buried in the sand. And I'm not saying that, it's a certainty, but boy, oh boy, the probabilities are high based on everything that we're seeing here in the news and what these economic indicators are telling us, pretty much other than the unemployment rate. So they also say that big bargains have returned across the retail industry after years of lower inventory and out of stock, a dynamic that is also hitting companies' bottom lines, including Target's. The company said Wednesday it now plans for a weaker holiday quarter. It expects low single-digit decline in comparable sales in the 3-month period and an operating margin rate around 3%. And just to give you some context there, I think their margins actually went up to like 6%, which sounds low, but it's actually very, very high for a retailer. And now they're back down to probably where they were 2019, if not lower. And I would say actually probably lower because they've had to reduce their prices so much to offload all that excess inventory. And here's the CFO for Target, I believe. As we look ahead, we expect the challenging environment to linger beyond the holiday season into 2023. The yield curve would agree, my friend. And yeah, this confirms what I was saying here. Usually their operating margin around 6%. In the third quarter, its operating margin fell to 3.9. Target had higher than expected markdowns. That means prices lower, especially in the final weeks of the quarter. It also spent more to manage inventory than that arrived early. Again, they're having to spend more to manage all this excess inventory they ordered as a result of the bullwhip effect. Now, here is something that really was just shocking when I read it, but unfortunately, it makes a lot of sense. He also said Target is seeing a higher level of shoplifting, which has jumped about 50%. Guys, let that sink in for a moment. Well, let me read that again, just so everyone heard that. And I believe this is the CFO that's still talking here. He also said Target is seeing a higher level of shoplifting, which has jumped 50% year over year. So far this fiscal year, those losses from shoplifting have had more than a $400 million impact on Target's operating margin. Most of that has come from organized retail theft. Josh, what is organized retail theft?
I think it's when like a group of people go in and steal something, but they're it's like planned out. Because right now, if you shoplift, you can't even get in trouble if it's below $1,000. So you can go into
Right.
Target, steal $1,000 worth of goods, leave, and then the worst thing that happens to you is you get like a slap on the wrist. So I mean, why wouldn't you
So it's
steal?
not just some random dude in there that's just stealing a pair of Dockers. It's like a group of people that like plan it out in advance, like some sort of
Ocean's 11 heist.
yeah, 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 at Target, right? That's funny. That was a good one for sure. Okay, yeah, but so I mean, where my thinking goes initially is you bail out all of these companies. You make it so people can never experience pain, or at least that's the message, right? But what does that instill in society at large? While at the same time, you tell everyone, well, you don't allow them to go to work. And then you say, no, 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 just stay home, do nothing, and let the government take care of you. We're not going to allow any of these consequences to play out. We're going to give you stimmy checks. And then what we're going to do is we're going to defund the police. So what message are the central planners really giving society here? It's that really there's no consequences for your actions, and there's no consequences for really any actions. Just like the cerveza sickness, we're not going to allow a pandemic to impact society. We're not going to allow businesses to fail. Now, this is their message. This is not actually what happens in real life. You guys know that the results are far different than the intentions. But again, this is the message that we're hearing. And it's no one's fault. You shouldn't have to go to work. In fact, it's dangerous for you to go to work. And we're just going to continue to give you these stimmies. So just become more and more reliant upon the government. And oh, by the way, the reason there is inflation isn't because of a supply shock, because of lockdowns. It's not because of excess aggregate demand, because we gave you quote unquote free money. No. It's because the greedy capitalists are screwing you over. The greedy capitalists, like the people that own Target, they're the ones that are raising the prices just because they know you can, and they're taking advantage of you. This is the message. So we're going to tell you that it's the greedy capitalist's fault, and then we're going to defund the police, and then we're going to make you completely dependent upon the state and make you believe that there are no consequences to your actions. And then we're going to create consumer price inflation, so you can't afford to put food on the table or buy clothes for your kid to send them to school. I mean, should we expect anything else than for just the I don't know what you call it, the theft rate, the retail theft rate to skyrocket? So, I mean, initially, this is shocking. It was shocking to me when I read it. But I think when you actually go through it, unfortunately, it makes a lot of sense. And then I think the next question becomes, well, is this going to get better or worse? So then you have to analyze, how did we get here to begin with? What were the variables? What produced this outcome? And in the future, are we going to see more of that or less? And I would argue that, let's just assume right now that stimulus checks, inflation, and demonizing capitalists are what created, and defunding police are what created this phenomenon. So do you think the central planners are going to do more of that in the future or less? I would argue they're going to do more of that. And although I think we're going to see some disinflation, I believe that this decade in general is going to be an inflationary decade of price controls, demonizing capitalists, stimmy checks, all of the above. So unfortunately, if I was betting, if I was a betting person, I would bet that this is going to get worse before it gets better. All right, guys, enjoy the rest of your afternoon. As always, make sure that you're standing up for freedom, liberty, free market capitalism, and we'll see you on the next video here in about 35 minutes, where we go live with some Ukrainian refugees from the war in Ukraine. And you guys are going to need to tune in for this one, because their personal stories, along with this Russian individual, are absolutely incredible. This is something that they should make a documentary from these people's story. So tune in, noon Eastern time. We'll see you here in a couple minutes.